India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Fresh new week, Monday morning. We're coming to you as always from the CNBC TV18 Motilal Oswal studios. It's a gang of three. Yes, a gang of three boys actually. I'm Prashant. With me, my colleagues Nigel and Mangalam. Guys, hi, good morning.
Good morning. We come back after what? A long weekend. Before that, we had the massive celebration of CNBC TV18 turning 25. Great insights coming in out there. And guess what? This is a truncated week as well. Albeit a dutiful one, where we do have to go out, vote, but a truncated week. Sounds good.
Well, I'm still getting over the summit, right? I mean, the biggest voices that came in there, it was, it was educated to say the least. And post that, the party that we had.
I was waiting when you would get to that.
I mean, that was something as well. The entire family comes together and, parties. And it's been a while since we did something like that. So all in all, it was a perfect day. Perfect summit and followed up with a perfect party.
Wow.
Feeling good.
Perfect long weekend to recover thereafter as well. So that was pretty cool.
Well, and we'll, of course, you'll continue to hear snippets and
about the summit.
About the summit, and of course, maybe a little bit of the party as well later. But the summit mostly, and some of the voices that you heard, both from corporates and markets, and we'll have them up for you through the course of the day. But here and now, as you sort of tune in this morning, you need to know what the markets are looking like, right? Because it's a trading day, it's a trading week. As Mangalam said, it's a truncated one, but it's the start of a fresh one. Now, we got 2 days of market reaction in the US to react to. That is Thursday and Friday. For us, the last trading day was Thursday. Friday was a market holiday. So this is essentially what the US market has done over the last two sessions. S&P is down 2%. Nasdaq is down 2.8%. The Russell 2000 in the last 2 days is down about 2.8% or so. So this is, basically the backdrop. What's the 10-year yield done over these last 2 days? It's unchanged, absolutely unchanged, 4.44. The dollar index also largely unmoved, about 0.2% higher at about 106.7. That is, a very sharp-paced move that we've been highlighting day on day. But the last two, maybe the pace slowed down a little bit. Oil prices down 2%, $71 a barrel is where the price of Brent oil was finally at. So the setup, the backdrop that we're waking up to this morning isn't particularly great. I just want to make one quick point, actually maybe two. One is that S&P 500 and the correction that we've seen, it's part of parcel. Essentially because two reasons. One, if you go back to 2016, around this time, the S&P 500 trailing price to earnings multiple was about 19 times. It is 24 times right now. This is trailing PE around the time when elections were over and Trump came to power for the first time, and Trump is now back for the second time. So 19 versus 24. That is one. So valuations are far more expensive. And you look at the level of yield, not the nominal yield, but the real yield. Back then, in 2016, US 10-year real yields were about 50 basis points. They're about north of 2% right now. These are two major differences as you look at what stock markets do, etc., which you need to keep in mind and be cognizant of. Essentially, the risk-free rate is much higher. Secondly, valuations as far as equities are concerned are also much higher. Okay, just a couple of things before I sort of circle back and tie in the levels here. And this is an important week. Markets will remain sensitive to Trump news flow, especially appointments. We've heard many appointments, but Treasury Secretary, that's the important one for markets because, that will determine the trajectory for fiscal spending and things like that. G20 summit perhaps will make headlines, and this is the first big global summit where leaders will be together after the Trump election. And of course, NVIDIA earnings will come through. I think this is Wednesday post US hours. And that again has the at least the potential to set the agenda as far as US markets are concerned. So what are the levels to watch here? Nifty on Thursday that is, left off at 23,533. Guess what the 200-day moving average is? 23,556. So basically we left just about 20 points under the 200-day moving average. we'll see if, that is still in play, or, as the Gift Nifty is indicating, we start straight away much lower. And then we look at the next support level, which is the 61.8% retracement of the entire rally from the lows of election, which is the 4th of June low to the all-time high. That only comes in at about 23,189. And, many have been sort of pointing to that level. Nifty Bank support comes in at 49,900. The 200-day moving average here is 49,750. Again, not very far away, about 150 points away. So that's the first port of call. And then the 61.8%, same June 4th low to the all-time high. The 61.8% retracement is 49,282. Again, not very far away from where we left off. So that's essentially broadly the setup. Gift Nifty will come up on your screen. I think it's indicating about a 70-80 point lower start. But while the US is down sharply, remember, we're already down about 10%, a little over 10% from the all-time high. So on a day-to-day basis, maybe, that is a bit of a silver lining. So let's see how we start, how we pick up from there. But the backdrop is slightly negative as we wake up to this new week. Magalam.
Well, you spoke about the US market. So let's start with the US itself. You earlier had, we pointed out that, our earnings season has been a season to forget. That's not the case for the US as well. So far, we had nearly 93% of the S&P 500 companies in the US reporting their earnings, and 75% of them, nearly three-quarters of them, have beaten EPS expectations. And 2/3 of them have actually given a positive revenue surprise as well. So those are a couple of factors that are working for the US markets. And what we'll watch out for this week in particular in terms of earnings would be the market darling Nvidia reporting their numbers. And then you'll have a sentiment of what consumer behavior in the US is like from the numbers coming in from both Walmart as well as Target. Cues for our own market. We're feeling a little better than we did all of last week. Why do I say that? One, there could be the sentimental impact of CLSA's shift back to India versus China, and we'll discuss more of that in just a bit itself. The second thing we'll watch out for is the reduced FII selling in cash. If you look at it over the last 3 trading sessions, the selling by FIIs in cash has come off from almost 3,000 crores to 1,850 crores. And as a result of which, the last 2 trading sessions, the net flows, the net institutional flows have been positive as well. The third reason, FII shorts, they're fairly elevated. The net exposure is at 2.2 lakh contracts, which is the highest that we've seen in this series itself. And short exposure is at 77%. And the Nifty is very close to its 200-day moving average, so we'll keep an eye out on that as well, an important level. Were we to bounce back, it has to be from these levels itself. All eyes on Maharashtra elections this week. Voting on the 20th, counting on November 23rd. All of this will set us up for an important week ahead. Nigel.
All right. Well, the bulls, they are bracing for a bit of a bounce. And the Gift Nifty is suggesting that we pull back close to around 80 points or thereabouts. So what stands between that bounce and, and what the bulls want? Well, there are 2 factors that are playing out here. One is the dollar index. That's holding at the highest we've seen in the last 1 year or so. And the second factor is the state assembly election results, which we will be getting by the end of this week. My sense is that dollar index, it appears at around that 107 odd mark. It could pretty much have played out, the strengthening of the dollar index, because it's moved very, very rapidly from around the 102 all the way to around the 107 odd mark. The good news for India, though, is Brent crude prices continue to be well-behaved. It continues to remain below that $72 per barrel mark. What about the FI positioning? Well, the FI is, the short positioning that they've added is close to around 16,000 contracts. Longs added close to around 7,100 contracts, which keeps the short positioning at around 77%. And in absolute terms, it's the highest you've seen all the way since June. So the FI is a net short. The problem is the direction they're getting right. And that's why we're not seeing that big short covering bound that play out. Though on the Nifty Bank, there was some signs of some covering in Thursday's trading session, because the Nifty Bank actually recovered from the low point of the day, ended with some marginal gains, and you had the open interest that was down close to around 2.5%. Moving to the options data then, the 23,500 call, 23,500 put, well, that was fairly active. And you put the premium together, it comes to close to around 300 rupees. So you add 300 rupees to the strike and you deduct 300 rupees from the strike, you'll get a broad range. That could be a strategy at place. But at the downside, you're looking at 23,200. On the upside, you're looking at 23,800 or thereabouts. So that could be the broad range you're working with. Though the 200 DMA becomes very, very important on the downside. The Nifty is hovering around those levels. The Nifty Bank, well, that is a few hundred points away from those levels. You don't want these levels to get broken decisively. And my sense is the bulls will put a fight, irrespective of what happens, at around this 23,200 to around 23,500 or thereabouts. In terms of stocks and sectors that I'm looking at, well, 2 of them. One is the aluminium plays. In particular, I'll be looking at Nalco as well as at Vedanta. That's because China has announced withdrawal of the export tax rebate, which was at roughly around 13% or thereabouts. That'll keep LME prices elevated. And that's why that'll be good news, particularly for companies like Nalco, Vedanta, as well as Hindalco, in that order. The other stock that I'm looking at is Muthoot Finance. It was expected that they're going to be upping their guidance because it appeared very, very conservative. They've gone ahead and they've increased their guidance from 15 to around 25%. So we'll keep an eye out on this one as well.
All right, Nigel, thanks a lot for that. So we'll keep an eye out on all these stocks as well as the levels on the market. And we were talking about the CLSA note. Let's get you that equity call coming in from Alexander Redmond of CLSA, who says that misfortune can happen in threes. So it has played out for the Chinese equities over the past week. He says Trump 2.0 heralds a trade war escalation just as exports become the largest contributor to China's growth. He says that the NPC stimulus amounts to de-risking with little reflationary benefit. And finally, he adds that higher US yields and inflation expectations have some scope for the Fed and thus PBOC to ease. He says they are anxious that these concerns lead to a buyer strike by offshore investors who built China exposure post the initial PBOC stimulus in September. He says they are therefore looking to reverse their tactical allocation in early October, returning to a benchmark on China and a 20% overweight on India.